Hello everybody, what's going on? So few important updates are coming from NIO's and finally NIO yesterday announced that it signed a deal in Armenia with N Motors to sell NIO and the Onvo brand products. This isn't just another overseas expansion. This is the clearest signal yet that NIO has perfected its asset light high leverage international growth playbook, and it could fundamentally change the cash burn narrative surrounding the company. Stick around because this strategy pivot is the blueprint for the future gains. So let's break this news down. NIO is entering Armenia through a partnership with N Motors. This dealer will be authorized to sell NIO and Onvo vehicles, which is huge because Onvo is their mass market volume driver and handle all after sales services independently. Here's the financial angle. The distinction that separates a smart profitable expansion from a risky capital incentive one. This is a dealer's agreement, not a distributor partnership. NIO previous global strategy involved adopting large-scale distributors in markets like Portugal, Singapore, and Azerbaijan. That's a robust model, but it comes with a longer commitment. The dealer model, as the company confirmed, is far more flexible. It's about shorter contract terms. No brand authorized, meaning NIO doesn't have to fund expensive NIO houses, and critically, dealer must meet the quarterly order volume target. This is not a goodwill mission, this is a sales engine with built-in accountability. The market has long punished NIO for its cash burn, largely driven by its insistence on a premium direct-to-customer approach globally. But the dealer model is the financials market dream solution. Here, I would say that it's a strategic pivot towards an asset-light model. Think about it, capital efficiency. NIO avoids significant upfront capital expenditure for real estate, staffing, and operational infrastructure in a new, unproven market. The dealer and motor shoulder that responsibility. Second, risk mitigation. If Armenia market doesn't ramp up as expected, NIO exposure is minimum due to the shorter contract term. They can pivot quickly. Third, scalability. This model, once proven in Armenia, can be instantly cloned and rolled out across dozens of smaller, high-growth emerging economies in West Asia, Central Europe, and beyond. This is a rapid, low-cost market penetration. This flexible approach directly echoes the comment made by NIO co-founder President Kinley Hon, who has emphasized discipline and adaptable operations in overseas market. They are no longer spending money to build a market. They are leveraging local partners to sell into an existing one. This ensures an immediate predictable revenue stream and volume for NIO, which directly impact their critical delivery numbers. For a stock like NIO, volume is the king. Higher volume leads to improved economics of scale, better supplier negotiation, and ultimately faster progress towards profitability. Furthermore, Armenia is strategically significant. It's a key entry point into the Caucasus region. Success here doesn't mean just selling cars in Yerevan, the capital of Armenia. It means gaining brand validation, logistical experience, and regulatory expertise that unlocks surrounding larger markets. It's a beachhead strategy with minimal initial investment. Consider the product mix here. Selling the Onvo L60, this is the NIO's lower priced high volume model designed to compete with Tesla Model Y. In an emerging market, this product is perfectly positioned to capture significant market share rapidly. NIO is using a high volume, low margin brand through a low cost distribution channel to enter new territory. That is textbook financial strategy. This Armenia dealers deal provide a strong quantifiable answer that yes, they can. By adopting this asset light framework, NIO de-risk its international revenue growth. Every new dealer agreement that locks in quarterly volume target is a boost to the top line with a minimal increase to the balance sheet liabilities. This is a formula for improving return on equity and accelerating the path to sustain profitability. This strategy clearly removes a major overhang on the stock. When the market sees a company executing a profitable, disciplined expansion strategy, it rewards it with a higher valuation multiple. Armenia is just one country, but it represents the scalable capital efficient engine that NEO will use to conquer emerging markets worldwide. So get ready for it. With that said, thank you so much for being here. See you in next one.